Hi, my name is Akhil from our Mortgage Broker. Thanks for joining me today. Today I've been joined by Grace Ballantyne. Hi, Grace.
Hello, how are you?
Yes, good, thank you. Grace works at Melt Property. She's head of operations there. And today I've been joined by Grace, and the questions that I want to ask her are around developments and the types of deals that Melt Property get involved in. So, Grace, let's kick off. Tell us more about you and how you came into property.
Yeah, so I came into property, I guess, formally a couple of years ago, but I've always been interested and obsessed with properties. And even when I was young, would look at floor plans and try and figure out what the best areas and so on were to buy. But I just didn't know that that was actually what I was doing at the time. But I have a corporate background in marketing and strategy. So I've worked at Now TV, which is owned by Sky, and ran the marketing channels there. And then moved on to Travelex after that and did a similar thing, running UK marketing. But I think, like a lot of people, when they get into property, I was just really bored with the corporate life and wanted more flexibility, freedom to do something for myself and actually use my brain, so to speak, as opposed to sitting in a desk in an office. So I left my full-time job and thought, okay, what can I do initially, to get some income coming in and support myself. And I think actually that's a mistake that sometimes a lot of people make when they leave their jobs, that they think they need to start a whole new business from the ground up. But actually what you can do is leverage your skill set from your corporate life and put that into essentially doing freelance work. So that was kind of my entry into, I guess, entrepreneurship, but also into property, because what I ended up doing was I just kept doing business consulting and strategy consulting for property businesses. So I worked with a number of crowdfunding platforms, co-working spaces, lenders, and provided my services that way, and actually learned a lot about property development, finance, investment, and so on through adding value to other people in the industry, and learning that way as opposed to paying for courses and so on, and just really soaking up information that I would get from my contacts there. And then after that, I did a stint at a development finance fund for a little while, and was part of the founding team there. So I was part of the process of underwriting development finance loans, speaking with the developers to bring in the deals, and then would also be speaking with investors as well, because we were building an equity Rolodex of investors to invest both into the fund and into the development projects too. And so, I was doing that. And then at the same time, started working with Melt Property, which I think we'll talk a bit more about later on. So it's just kind of doing a little bit of everything in property. And so I've got, I guess, quite a rounded background in the different areas of the industry, and which I'm now putting into the development side of things.
Oh, that's amazing, Grace. So you've got a wealth of experience in different parts of the property business, and basically you've leveraged your experience and skills, and you've gone up the ranks, and now you're working for a large a development company that basically develops properties across the country, right? And in London and the home counties in particular. That's amazing. So
good so far.
No, that's great. So with Melt Property, tell us more about Melt Property. Now, I've looked at their website. They get involved in quite grand schemes. I've seen some great sites that you guys have built over the years, and I understand you guys were founded in 2002 by Evan McDonald.
Yes, that's correct.
So what types of developments do you guys look for?
So the business was obviously founded in 2002, and historically it's been primarily residential, and Evan was doing that more or less himself for the past 18 or so years, with maybe the support of a couple of team members here and there. And so that was much more residential led schemes out in Gloucestershire, Kent, and a little bit in London as well. But recently, over the past couple of years, the business has started to scale up. So we've been doing larger scale residential projects. So one that's actually timing couldn't be better, but coming to market at the moment is a scheme of 12 houses and 9 flats out in Gloucestershire. A residential-led scheme to sell, but then we have another scheme out in Gloucestershire as well, which is a build-to-rent scheme too. So it has primarily been residential, but actually now the focus is starting to shift much more to commercial properties. So we have a development in Kennington in southwest London, which is a part hotel development scheme. So with that one, we're looking to get 160 odd bed apart hotel on the site with ground floor retail space and Europe car as well in the basement as well to really maximize the space. So we've taken that shift. We still very much do residential development, and actually that's quite a big focus for me within the business, but obviously we see the opportunities with commercial and the security that it offers to both investors and developers, and the fact that you can de-risk projects upfront through forward funding. So we're taking that shift and focusing more and more on commercial, especially being the apart hotel market as well, which is a growing market here in the UK. So that's kind of our point of differentiation.
Oh, that's amazing. So you guys have got a wealth of experience in developing residential apartments and houses, and now you want to leverage that experience and move into commercial and develop mixed-use properties, including hotels as well. Has the coronavirus affected those business plans going forward? Bearing in mind the hospitality industry is taking quite a battering at the moment, and obviously has maybe some say commercial has as well because of the foot flow, negative foot flow, for example, and tenants, basically people buying now online rather than from retail.
Yeah, so I think with retail, it's about, what you're doing with the retail shops, right? So if you are more of an experience based store, or like a gym or supermarket or something like that, where people need to go in there physically in person, or if you're a cafe and you're going in there to share that social experience, then obviously I think that still has a place in the market. Obviously this very moment it's a little bit quiet in all of those venues, but I do think that is a somewhat short-term situation that we're in. I think probably see some of those companies unfortunately not survive for too much longer, but that does then mean that there's, I guess, retail space hopefully which might be available then at a reduced cost for investors and developers alike. With what we're focused on, which is more so hotels and apart hotels, again, that's taken at the moment, I guess, a little bit of a hit, but again, that's a short-term situation that we're in saying that actually apart hotels haven't had such a massive impact as what it has been on hotels, because apart hotels generally have a slightly longer stay. So a hotel average stay is 1 to 2 nights, whereas an apart hotel is 3 to 4 nights or possibly even longer, because it's often workers who will come from another city who'll be there for a short-term contract that might need to stay for a couple of weeks, go home, stay for a couple of weeks, and so on. But actually right now a lot of people are staying in apart hotels and short-term rentals as well to get out of London or to isolate. So that has been impacted, that market, but not quite as much. So for us, in I guess what we're doing in terms of the acquiring of sites, we're working on the existing pipeline, obviously with a sense of caution with everything that's going on, but that will very much still be there once we've sort of ridden this coronavirus wave, and so I guess at the moment the focus is getting all everything in order to make sure that when we do come out of lockdown that we've managed to progress a few more projects, and that we're sort of in a good position for the rest of 2020.
That's amazing. Okay, good. So you and the team at Melt are very optimistic about the opportunities going forward, and once we come out of COVID, and you guys, I guess the business plan's not going to be changing in the medium to long term, albeit I guess more due diligence will be done on site.
Yeah, definitely more. Well, I mean, we already do a lot of due diligence in the deals, but I think we'd just be slightly more cautious on everything, and I think as well, stuff that we are progressing, there's potentially room then to move right on offer prices and so on, because we might be in a different market situation a few months down the line. So I think it's just being aware of what's going on around us and not being overly ambitious with what we're doing, but being realistic, but optimistic at the same time.
Yeah, that's a good point there. I like that, because when we speak to our developer clients as well, when we're arranging development finance, we ask them to be realistic. We're doing market comparables, we're doing appraisals, we're looking at build costs and GDVs as well, right? Because I think once we come out of COVID, there's going to be a new norm, right? And we've got to work with the lending, especially with the funding lines, because I think they're going to be taking maybe a haircut on GDVs, and they're going to be looking into deep diving into build costs, right? And time that it'll take to do a build, and then the resale as well. So tell me more about your developments. Do you guys build to rent or build to sell? What's the model, or is there a blend?
So it's a bit of both. On the residential side, a lot of it is build to sell. We do have a build to rent scheme of flats in the Forest of Dean, and that's just purely because that's what works better for that project. So for us, it's on a case by case basis, and what the right exit is, and where we can, I guess, maximise the profit and value of the site. On the apart hotel side of things, generally what we'll do, well, for example, what we do with the one in Clapham is we're working with a family office on that one, and then we will have that one forward funded, hopefully by a pension fund. So typically what we do with an apart hotel is we'll get an operator in place, say on a 25-year lease. Then once that contract's sorted, we can get a pension fund to forward fund development scheme. And then that means that we can de-risk the project, I guess, upfront before the work actually starts on site, which then gives a level of security, I guess, and risk management for both us and the investors in any of the projects, which you don't quite get with, you know, residential. Say if you're building a 30 odd unit scheme and you have to sell all the units at the very end of the project to 30 different buyers, it's, you know, somewhat more risky, because we don't know where the market might be in a couple of years' time once a scheme of that size is built out, but also means you have to sell to 30 different buyers. So this is a way for us to, I guess, to de-risk things. So that is I guess, a build to rent model, but we'd be selling that on to a pension fund or an institutional investor.
Okay. And with regards to the pension funding, the forward funding line, do you do that at the outset? So when you acquire a site, you'll then create the business model and the plans and share that with the pension fund to say, are you happy with our deal proposal? And would you fund it on the back end? Is that the usual sort of parameters that you work to?
Yeah, so with that, you really need to have an operator in place in order for them to then actually, you know, go ahead and purchase it. But all those conversations happen in the background anyway.
Right.
And then once those contracts are signed with the operator, then that's when, I guess, the deal can close, so to speak, with the pension fund or another institutional investor. But we know, you know, the types of sites that they look for, and the types of investments that they look for, and from having those initial conversations as well, we know that our hotel sites are of interest, and a relatively safe type of investment for those kind of companies.
That's amazing. Thank you for sharing that with us. Lastly, I just want to ask you, for those viewers that are either moving into developments or are in developments, what would you say are the top 3 things that you would say that you guys do and that you'd have a key eye on? So what's the 3 top things that you'd look at before you perhaps share the deal with a lender? What's the 3 key things that you guys would look at or underwrite initially?
3 key things that what we'd look for in the appraisal.
Yeah, so say for example you found a site and then there's an option on there to build 20 units, you know, mixed use, commercial and residential. What's the 3 main key drivers for you? Is it footflow around the high street particularly? Is it about location? How deep do you go into sort of the comparables of resale units?
Very deep. But it's different, obviously, slightly different for residential and for I guess the apart hotels that we're building. But it's really, I mean, I kind of look at it as though, you know, especially on the residential side, okay, if I was going to live there, what are the key things that I'm looking at? You know, I'm looking at what other prices of the other, you know, flats or homes in the area are. I'm looking at proximity to the station, proximity to amenities. Are there good schools in the area? What's the location like? You know, is it backing onto an industrial estate? You know, is it in a flood zone? All these things. I think it's the on the residential side, it's very much, you know, looking at as though you were the buyer and thinking about the local market and what the right product market fit is. So if your site is in the middle of the countryside, but you're proposing to build 1 and 2 bed apartments, that might not be the right fit for that market. That's probably better if you're more in a city centre, and detached or semi-detached homes might be better for that location. So I kind of look at a whole view as to, okay, is it right product market fit? What's the area like? What's the buyer? Kind of create that in my head when I'm appraising a site initially, but really doing a deep dive into the comparables and what the build costs are for those types of projects. And yeah, there's rules of thumb that you can do, but you do get a bit more used to it over time as to what things cost to build in a certain area. And also that's when you have your core power team involved, that then you can, you know, reach out to your builder and get quotes and so on. And it's a similar thing with, I guess, apart hotels, but that is more important than, you know, proximity to transport links, or parking, for example, if it's in a slightly more out of town area. It's the same sort of thing, but just looking at it from a commercial angle and thinking about, okay, well, you know, where would, you know, there be enough demand to fill a 150 odd bed hotel, you know, at least 70-80% occupancy throughout the year. You know, that is going to mainly be in town centres, but not, you know, smaller town centres. That's, you know, big cities like London, Manchester, Leeds, Birmingham, Bath, for example, you know, Oxford, those types of cities, as opposed to ones which aren't so much destination focused. So it is a little bit case by case, but what I quite often say as well is just like, use your brain. So it's common sense, right?
I was going to say the same thing. You know, you're totally right. Well, common sense is not common in most cases. But however, you've got, I guess you've just got to keep things simple. I always say to my clients, don't over engineer anything. I think the key things are, and these are the drivers that I ask my clients about, is look at the location. I mean, location is just, it's the key thing, right? And then you look at market comparables. So if you're looking at a build scheme, you know, how long does it take to sell a property in the area? So we're in an area now where it's quite readily available on the internet. We can look at sale prices, how long something took to sell, and what price it got sold for, by using Zooplas and Rightmoves and Land Registry as well. So the data is readily available, which is quite nice to see.
And that's actually another key point, as well as time on market, because if you're building something, especially rural again, you know, that could take a lot longer to sell. So you probably want more margin in that deal, to make sure that you can, you know, weather the storm of, you know, if it does take a bit longer to sell, as opposed to something in the city centre, you may or may not, depending on your risk appetite, you know, be okay with slightly less profit on cost, but that's because you know that that's much more likely to sell and sell quicker. So it's weighing up those pros and cons too. But 100% right there on the comparables, because, and that's such a key thing, and but also making sure that you have comparables that are like for like with what you were building, as opposed to just bringing in anything and everything from the local area, because then you can actually do a deep dive into what your end sale values are going to be, or at least, you know, the best possible guess that you can make at that point in time.
Yeah, no, that's good. And these are the conversations when I speak to my developer clients that are looking for traditional development finance funding. These are the questions that I put to my clients at the forefront before I even go to development lenders, because ultimately the development lenders are going to be asking the same question. You know, the time it takes to put the build up, you know, what the market comps look like, what's the resale values, how long does it take to sell something, and have you got a sort of a buffer period, right? You've got a contingency plan, as well as cash in the background, because finance costs are one of the biggest costs that you can apply to your build costs, right? And finance is cheap at the moment with interest rates really rock bottom. However, it does take quite a hit into the build costs, I should say. That's great, Grace. Anything you want to leave us with? Any hints and tips or things that you guys are going to be doing at Melt? You guys do some amazing schemes, and you've got different eggs in different baskets.
We've got a lot of eggs and a lot of baskets.
That's good.
Moving forward, I mean, our focus moving forward is very much on the commercial mixed use developments,
Yeah.
especially apart hotels, because that's just where we see the opportunity. And there's a lot of growth happening in that market at the moment. So we like to be one step ahead. But we're very much still doing.
What type of hotels, what type of operators would you get in there? Would it be the Holiday Inn Expresses, or would it be a local brand?
Generally the bigger companies. So, you know, your Travelodges, Premier Inn,
Yeah.
on the apart hotel side, there's a number of different operators, but there's ones like Room 2 and Stay City are I think the key players in that market at the moment, with several others coming up. So
Yeah.
it does also though come back down to, you know, what the site is, because the site might be best fit for a hotel or an apart hotel, because they're two very different things.
Right.
And it does depend on, yeah, I guess going back to what we were saying before, on the demographics and the area, and looking at what the right product market fit is there. So yeah, a big focus on the apart hotel markets moving forward. Still very much focused on the residential stuff as well. It's just having a bit more of a split between the two in the business, and working on I guess partnerships as well, because we see a lot of opportunity to partner with other developers and delivery partners as well, which then means we can expand our reach across the UK and further afield than where, you know, we all physically live, because I guess there's a certain distance that we can all, you know, travel day to day. But if we work with, you know, partners that we know, like, and trust across the country, then that offers an opportunity to continue to expand the business.
That's perfect. Grace, thank you so much for your time and the insight into how you guys source deals and more about Melt Property. Thank you. And for the viewers that want more information about Melt Property, I will leave their information in the comment section below. And for any of you that are looking to move into developments or thinking about funding and how the funding structure is financed, get in touch with us at ourmortgagebroker.co.uk. We're only a phone call or email away, and we'll be delighted to help. Grace, thank you, and I look forward to seeing you again.
Thanks for your time.
All the best. Bye-bye.